Netflix subscribing numbers crushed estimates, adding 9.3 million customers in the first quarter. That was versus an estimate of 4.8 million. The company also said it will stop reporting the subscriber numbers in 2025. That might actually be the biggest headline in all of this. Here is co-CEO Greg Peters last night on the call.
Each incremental member has a different business impact. And all of that means that historical simple math that we all did, number of members times the monthly price, is increasingly less accurate in capturing the state of the business. So this change is really motivated by wanting to focus on what we see are the key metrics that we think matter most to the business.
Joining us right now is Jessica Reif Ehrlich, BofA Securities Senior Media and Entertainment Analyst. Okay, so they beat the numbers. That's the great news. The market on them in the stock price goes down, I think, on the back of something about this.
Exactly. So
what do you think is happening here?
I mean, by them saying they're not going to give the sub numbers or ARPU, they call it ARM, but ARPU, that's the key metric. That's the key KPI. So not surprising that the stock reacted negatively. Having said that, it doesn't change one thing about their growth trajectory or the growth drivers ahead. This is like the cable industry 10 years ago.
Right.
It's a very predictable, stable business, double-digit top-line growth with margin improvement. And the benefit of advertising, which is a high-margin business, is actually going to kick in.
So why do you think it immediately moved this way?
Do
you think that people thought this was a bad sign, that something else was happening?
Something was declining?
Well, I mean, when you're at 270 million subs, not that they can't grow, they can, but they're not hitting a limit right now. But the growth obviously will come from lower ARPU markets, whether it's APAC or Latin America. So it's, Greg Peters did say last night that the mix of subs, each sub is not equal.
Right.
So there's something to it then, because they don't want to show that ARPU is actually, average revenue per user is actually declining because they're in these markets that are less profitable per user. They want you to look at it more holistically.
Exactly.
That's the signal.
Exactly. And if to the extent that advertising kicks in next year, which it should as they scale up, they grew the ad platform with the ad subs 65%, 40% plus of new subs are going to the ads here. They're pricing it that way. So to the extent that they can actually scale up that platform, they have what advertisers want, right? They have engagement, they have subs.
One of the big things they've been working on in the past year, which I think is created some of those subs, was this idea of the password sharing piece. How much more of that do you think they have to mine?
Again, it's hard to tell.
But was that the low-hanging fruit, and now they're done on that? And then, what percentage of those new subscribers do we think are actually new subscribers, or were, subscribers who were paying? Newly paying subscribers. Do we know? And does it matter?
We don't know. And also the option for password sharing crackdown was either you become your own sub or you're just an extra member of the house, which just either way, you're driving revenue. One way you don't have a new sub, one way you do.
Right.
Which makes the sub number maybe a little bit less relevant. But you can see the revenue growth drivers, whether they still have pricing power, they have advertising still coming, and they do have sub growth around the globe. And they have engagement.
Is there a time period in which you'll say these subscribers who are newly paying subscribers are going to stick? Or, who knows if these newly paying subscribers are actually going to say, I'm actually using this app a lot and I will continue to pay for it?
Right. So anyone who came in through password sharing, you don't have to market to them. There's no extra content cost, and they know what the service is, right? So likely they will stick because they know exactly what they're getting. And the focus last night, a lot of it in the call was about engagement. Whether it's, we all know the shows, we were just talking about what shows we're watching, but also they're adding a lot of live, a lot of people are talking about this boxing event this summer. I'm sure they'll add more sports, games, but they're also adding.
Hold on, but you said you're sure they're going to add more sports. So they have been very reticent to add what they would describe as real sports because they don't like to get into what they would think is the rental business.
Exactly.
Meaning licensing stuff that then they don't really own.
Right.
Do you think that they're ultimately going to get into that business?
Not in the way of some of the broadcast networks, but, WWE is year-round programming, whether you call it sports or entertainment sports, but there's a lot of chatter that they will bid for part of the NBA in-season tournament, which is being moved to the beginning of WWE. So we'll see. But yes, I wouldn't be surprised if golf or something else where they can have long-term, where they can have long-term rights
Okay, let's go 30,000 feet for a second. How many of these services do you genuinely feel, in the end, the American family is going to subscribe to? Is it 2? Is it 3? Is it 4? Is it 1? What is it?
I'd say 3 to 5. If you look at historically, well, historically there were 3 to 5 broadcast networks. There were 3, and then Fox came, and then there were like 3 to 5.
Free. Everything was
you didn't
free.
pay for it.
You didn't have to pay for any of it.
3 to 5 major cable network groups, so it was consolidated to 3 to 5. So eventually there'll be 3 to 5. There will be some bundles. Not everybody will be in that 3 to 5 zone bundles. But you turn on your TV or device or whatever you're watching, Netflix is like the whole pay TV bundle, and then everything else is add-ons.
Okay, so right now your 3 are what?
My 10. I
Right.
get everything.
No, I know you get everything. No, but I'm saying if you have to get it down to 3.
I would say that obviously Netflix, and
Right.
that's a given. Probably the Disney bundle.
The Disney bundle with Hulu. So we're
With
really
Hulu.
and ESPN
And
Plus.
ESPN, so the Disney bundle, and then I believe that Max will look very different in a year. So Max, Warner Brothers has the best library and the deepest library. So I think Max will be there. And you know, I mean, I know people say Amazon and Apple, but their content is.
Well, so I was going to say, there's Amazon, there's Apple, there's Peacock, there's Paramount Plus, and by the way, new headline this morning that Sony may be trying to team up with Apollo to get in on that.
Good luck with that, because we'll see. I mean, they make it
good
part
luck
of
with
it.
that because what?
Because Sony is a Japanese-owned entity, and they can't own broadcast. They can't own CBS or CBS TV stations.
So you'd have to split it up.
You'd have to break it up.
So as you look at these chess pieces, if we're sitting here 12 months from now, I don't know who the president of the United States is going to be. I don't know what the regulatory environment's going to be. Do you think that all of these companies will still be independent 12 months from now?
No. I mean, you kind of hit the nail on the head. Should NBCU and Warner Brothers Discovery be one company? It would be amazing if they were. There's obviously a lot of focus on that, but that would be probably the powerhouse. Obviously, Paramount will look
And is
very
that,
different.
by the way, hold on, I just want to go back. Is that your bet for a year from now? That's what happens? When you said, because you said you thought Max was going to be the absolute number 3. Are they the absolute number 3 as an independent player, or are they absolute number 3 with a combination of with somebody else?
I was actually as an independent player. They have a really incredible library. They're ramping up DC, the whole DC universe. There's a lot that's coming on Max. Saying a year without knowing the regulatory environment is really hard.